The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. Dow's down 170 at 17,600. It's that 17,500 level that's going to be absolutely key in my work. Down 21, the S&P at 2060. Down 54 in the comp index. That's the very broad NASDAQ composite index at 49.43. VIX index at 17.98 is starting to wake up these days. We'll see what happens over the coming sessions into Monday. Most importantly, we're looking at the, let me just type it in here, IWM. Whoops, wrong one. Let me just get this back. I wanted to show the 10-minute naked chart and the 10-minute fully dressed with technicals chart. So we'll be back to that in a moment. Let's put the 120-minute chart up there, and let's go back again to the IWM. IWM is down $1.27 at 122.61, Russell 2000. IWC, which has been an absolutely spectacular micro cap leader, down 90 cents at 79.46. Very certain that this is going to be a peak F in the weekly chart. So we're going to be watching this one real closely. Let's go to the QQQ series, down $1.25 at 106.72. Has to hold the 105.50s, or 105.30 really. Closes under 105, in fact, this week or next week, and that support level is just gone. And that would suggest that it's going to go into the 103, 102 area quite quickly, actually. Let's go to gold. GC. Gold itself is up 7.30 at 11.59. Trying to have a bounce here. The 120-minute chart suggests that the 1165 area is really needed to get 1165 to 1175 rather than being at 1159 right now. It needs to be in that range so that it can get to the 200-period exponential moving average of 1174. That takes me straight away. First of all, I'll do silver. A lot of people trade silver. Silver is also not acting very well at all. It's holding okay in terms of the 120-minute chart, but boy, at the moment it's at 15.10, up a tad. The moment it takes out 1460 support, it's in trouble. It's going straight down to the low 14s. All right, let's look at high-grade copper. High-grade copper is holding well, considering it's changing the look of the candle, which was horrible yesterday, horrible early this morning. Now copper's up a tad. It's up 0.05 at 2.50. That weekly chart has 2.65, very strong 9-period moving average resistance. But actually, if it takes out, it's already gone below the key level that was made back on January the 30th, the week of the 30th. So if it takes that out at any point in the next 2-3 weeks, that's just a big negative. All right, let's go to the dollar DXY. The dollar itself is trying to hold in the 120-minute chart right here in this right-hand corner. Stochastic says that 22% is trying to turn up. If the dollar is able, by tomorrow afternoon, today's Wednesday, tomorrow afternoon, if the dollar is able to get to 96.70, that's just 30 cents from here, 25, 30 cents from here, that's going to be really important. Why? Because it says that the pattern it's trying to follow is a pattern it's going to try to follow once again, and that is making the cup formation to go to the upside. What is the cup formation? It's the exact opposite of the pattern that I always talk about, the lowercase h, the dreaded H pattern, that keeps going to lower left side lows and lower left side lows, just constantly making this lowercase h formation that breaks and then repeats over and over and over again. So the dollar is doing the opposite. It's making the inverted Y pattern, trying to get back to the top of 139 that it made. 139? 139? Why did I type that? It's 100.39. I keep looking at it saying, is there something, are my eyes deceiving me? 100.39, my eyes were deceiving me. Okay, there it is, very nice. Okay, and that's red because it made a top. Change the color to red. There it is. Back in March, I believe. Week of March the 13th. There you go. So it went from 100.39 down to 93. 7.7% correction there, no big deal. It's taking time rather than price. And if the dollar spikes above this high of yesterday, 97.24, I have to tell you that gold is just not going to be able to make it. You would think in this period you would get the question in the den was inverted Y. I mean, not inverted upside down, an inverted H, that is, which becomes a Y. That's what I meant to say. Yes, a Y pattern. But it's actually a Y that's reversed, not upside down, but reversed. All right, so let's go on. And so we've done that, just the euro dollar, EUR, USD. Now I want to do a couple of things. EUR, USD is actually having a nice session here. Hey, that says that the dollar, oh, I didn't give you the downside. The dollar breaks 96 support, 95.80 really. That's not going to be good. It says dollar's going to take a little more time, gives gold an opportunity to at least rally, and the euro dollar should be, together they should rally. But I don't think very far. It's just more like a rectangle formation. All right, so now let's go to this. I want you to look at the IYT. This is very negative that the IYT, the transportation index, is pulling back so sharply because it's consistently having red candles for 1, 2, 3, 4. Wow. 1, 2, 3, 4, 5, 6, 7. If it's a red candle this month, it'll be 7 out of 8 candles in the monthly chart since the top that was made at 167.80 back in November, was it? Yep, November of 2014. So this is not good for the transport, it's not good for the economy, not good for anything. You want to see the transports getting right back from 144 right now into the 153 area within the next 2 to 3 weeks because it needs a bounce. That's the IYT, and the IYR is the REITs, and that is in a bounce formation, and that's all I can say. The H that we've seen, those lowercase h's, I wouldn't be surprised if the REIT at 73.66, the IYR, iShares, US real estate ETF, could bounce, and it could bounce towards the 200-period moving average at a 75.50s, maybe even a tad high, and then starts to come back down again. That's the way I'm looking at it. And now I'm doing some of the Chinese. Look, the FXI, which is the iShares China Large Cap ETF, made a peak D in the Chapman Wave back at 52.41 on the week of the 24th of April. That was at leg E, which became a peak E in the monthly chart. And the daily chart keeps having these candles which try to close really nicely, but boy, they're ugly candles. But this is the 1, 2, 3. This is a three gap play to the downside, but you haven't had the expansion of the candle itself. And the MACD is still very poor, and the stochastics trying to rally from 11%, but it hasn't been able to. So how in the next 2 days, I think we're really close to a spring to the upside in the FXI, which is trading at 40.03, down $1.93 off the low of the day. The low of the day was, in fact, made at 39, was it? 39.61. So, yeah, we're watching this one real close. I think it's real close to a bounce. And if you look at the Dow Jones Shanghai index, that is a little different. That shows you the severe decline. That is a really sharp decline from 715.85, 715.85, down to today's low in the 450 area. That is huge. That is nothing to sneeze at. Let me just put this in. 446 area. So 446, so that's a 50 point, yeah, it's 8%. That is serious stuff. So the closed-end fund, CAF, which is the MS China A Shares Fund Inc., has made a peak D in the weekly chart. Oh, it looks very close to the Shanghai Dow Jones Shanghai Index. And look, the MS China A Shares Fund, this one went to a peak E in the monthly chart. Yeah, I couldn't do that with the Dow Jones chart for some reason. I didn't get the same count. Let me just do this again. DJSH. I got a C there. Now I'm not sure why. Oh, maybe because I didn't have enough data. A, B. All right, well, I have to go with the one that can give me a proper wave count, and that was not the Dow Jones Shanghai Fund Index, but the actual CAF. I must write that down. I always forget it. CAF. Got it. CAF right there. Yeah, look at it. Wow. And it's at 2842 CAF. The M/S China A Share Fund Inc. And it's down $1.33, down 4.47%. And it's gone below the 200-period moving average in the daily. The weekly is down at 26.16. But even there's no real support. There's no real support at all until you start to get with that A pattern that I always talk about. Well, it's an A share. It should have an A pattern. And that A pattern says that if it breaks 26 support, it's going straight down to test the area, not necessarily the price. No, 22.14. It'll be this area before there's a pretty decent bounce. And that'll be in the 24s. All right. Wow. I wanted to show you this chart again. Remember I had drawn it in just moments ago. I said one is a naked chart and the other is with all the technicals, a lot of Chapman Wave technicals. Look, in this chart here, I'm going to show you, I'll expand it a little bit. There's the 200-period exponential moving average. Here is the CCI average, this red line here. Here is the 9-period exponential moving average. Here is the moving average. I believe that is the 9. Yep, that's the 9 EMA. This one here is the 14-period exponential moving average. So I've got a whole bunch of things. And I've got the MACD, I've got the RSI, I've got the slow stochastic, I've got the unbalanced volume, the blue lines. But what's really important about this is that when I look at the naked chart, I can get a tremendous amount from this naked chart. Remember, I drew the arch in way back. I also drew this in as it was coming down, and I put the left side, right side with the plumb line in, and we put LS, RS, so you know what I'm talking about, left side, right side. And they're levels. I love to do this on levels when I'm trading. I like to do that because why? If it breaks this support, this horizontal support, then what I'm looking at is the new one that takes you to the 2042 level, but the time frame says that it should be at 1240 to 1240, that's 10 to 1, somewhere around the 1 o'clock area that it should be testing. And that's only if it breaks the support here. And that's the way it works. 2047.25 on the E-mini, 10-minute chart. I'll be right back. Basil Chapman, and this is the Tiger Technicians Hour.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back, and a couple of questions we had about the XLK. Yes, XLK has got a weekly peak D, daily peak F at 43.81. This is the S&P Select Tech Spider Fund, and we haven't got yet a signal in the monthly that it is a peak G rather than a peak C. We'll have to wait to see. But if it closes under 39 at the end of this month, that will actually under 39, under 38.50. That'll say yes, that was a peak of significance. All right, we're going to go to Travis in St. Louis. Travis, how are you?
Doing fine. How are you?
I'm well, thank you.
Yeah, I emailed you Monday. I know I told you that I got my full position on finally in Tokai, and I'm just ready to just kind of sit and hang out here probably for the rest of the summer. But I just wanted to kind of get your thoughts on this, maybe on the weekly and the monthly charts now.
Yes,
because I'm going to be in this for probably a year or so.
So let's do this. We'll talk about Tokai because it's Tokai Pharmaceuticals, or Pharma Inc., does prostate. It's in a phase 3 level. It's waiting for, it's still waiting, right?
Yeah, well, they just got the enrollment started, so the trial is underway. It'll be probably an 18-month trial or so.
Okay, so what happens is that Travis likes to get positions in certain of the biotech stocks that had fantastic results in, what was it again?
Prostate cancer.
Right. So, and now he's got another one on his radar, which is Tokai. So this
you're talking about Clovis. Okay.
Clovis, yes, CLVS, yes.
Yeah, I'm totally out of my Clovis position now.
And he got out of Clovis, did beautifully, and planned it, and did. There was just one moment where you didn't have your full position as a spike, but you got just a fabulous trade in the lung cancer oncology. Inc. is the symbol is CLVS. Now it's down sharply from that. Now I was going to bring up the whole sector, and I was going to say to you that it might be a situation. Whoops, this is not the chart I wanted. It might be a situation that you are in your position, but it's usually, and we had spoken about this the other day when you had called, and I said, it's a little unusual for you to get your full position on the rally rather than on the pullback, but it was part of the plan that you had, more in timing, etc. But I'm going to talk about that. Because in a sense, when you did that, and you remember I brought it up right away, I said, change of methodology. You know, not much, but enough of a change for me from what you usually do to say, hey, you might have been a little impatient because from the look of that 200-period exponential moving average at peak E in Tokai, TKAI, trading at 13.12 down 36 cents, it looked like it was going to use up some time. And we wouldn't know if it was going to use price unless it took out the low of the candle of the 11th of $13, round number. Well, yesterday it went to 13.05. So what I was going to suggest to you, because this has to do with timing, it has to do with product announcement, it has to do with the anticipation and the results. So sometimes they can get a fantastic result, but it didn't beat the anticipation. Or it's the other way around. It's way better, and the FDA gives a kind of approval that is just hitting the ball out the park. We don't know about those things. So this is what I'm going to suggest to you. You know, obviously you don't have to do this right now, but think about it over the coming day or two. I'm going to make a suggestion that you actually, this is if you're asking me my opinion about the weekly and the monthly. Because the weekly and the monthly is in an absolutely decisive rectangle formation between the low that was established soon after the IPO of 9.67 and the high that was established at 1787. That band has been narrowing, but the unfortunate thing is it's making lower highs and lower lows. And if you remember, I drawn in a trend line, and I said that trend line fits exactly with the resistance that stopped it at 1433 the week of the 12th of June, at 1445 the week of the 19th of June, and at 1423 the week of the 26th of June. And those little barriers, those three cluster formation barriers, are saying there's a good chance that if, in fact, there's a bounce in Tokai Pharma and it's able to take out on a weekly basis and close above 1433, 1493 is the 200-period exponential moving average, which it's only closed above on the IPO, and then once week of the 7th of November, and that's it. So it's only closed above that 200-period moving average. It's almost like I've been looking at the VIX index with that 200-period moving average. This is the first time the VIX index has had a chance to see it being tagged in the weekly chart. So now I want to give you the scenario. If you don't mind holding, I want to give you a scenario of what I would personally be doing, the way I'd be looking at it just purely technically. This has got nothing to do with when the announcements are made. Can you hold on?
Absolutely.
Okay, we've got
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, and we're going to go back to Travis in St. Louis looking at Takai Farmer, and then we will go to Shivan in Boston. So here we are. So this is my thinking here. If, Travis, if there's a possibility that I'm going to say to you, take a little bit off right now, but there's a possibility that being a biotech, it actually doesn't pull, it does pull back, but it doesn't pull back that far. From 13.14, it goes down to 12.35 and starts to hold at 12.20, somewhere in that area. And then suddenly one day, there's this big spike up and it's trading at 13.75, and you say, oh, geez, now it's too late to put that back in. But if you're asking me my opinion, the way I'm looking at it, I'm not sure I would have the full position. That's my issue here, is I don't think this is the time to have the full position unless it really holds, and we don't know if it's going to hold. It holds in that 12.50 to 12.30, maybe 12.20 area on any pullback. So all I can say to you is the weekly chart is looking really good, but it hasn't broken out. It needs to get to the 16s. Then I'll say, hey, that is fantastic, because now the monthly is starting to kick in, and that's really what you want. So I don't see that just yet. I do see that the biotechs could be a reason for this to pull back. The fact that it's got this news that should be very good is obviously there because it's holding very well, although on a percentage basis, 14.45 down to 13.14. That's a big percentage, but you're talking about a low price stock. So that's my only suggestion is I don't want to interfere with your thinking. I don't want to change core positions or anything, but I do want to say, based on the market activity right now, I would want to take off a little bit to have back to give myself breathing room and a little leeway to be able to put back in if it's lower down. And that's just the only thing I wanted to say to you.
Yeah, I mean, that makes sense. I mean, I bought this stock over a pretty wide range of prices. I mean, I think I started buying around like 11.50, and I've got some shares all the way up to around 14. So
right. So your average cost.
I've got some shares I could sell right here that are profitable.
Yeah, I think that makes sense to me. In fact, you could have a trading position on a stock like this because it really shows a trading range, a very nice, clear trading range. Buying in the low 12s, taking that little bit off every time it gets to the 13s. You might be able to do that maybe 3 times until it really breaks out. So I hope that helps you.
Well, hey, real quick too, just for 20 seconds. Do you, with the market appearing to be trying to roll over here? Do you have any idea on a time frame, how long maybe this correction could play out? Do you think it's like 4 weeks, 6 weeks, 8 weeks? I mean,
I have to wait for Friday. I have to wait for the weekly because that's going to give me clues on my monthlies. If my monthly is just now beginning to turn down, I have to consider that we could go into September on the downside. So I don't want to say anything just yet. I also want to see how the rotation works when that big spike comes up to the upside that actually holds. If it does, I want to see which areas are rallying. And if the IBB holds up even longer, it's going to say, you know what, we've actually got support here. We're just continuing the rotational correction. So I don't want to say anything just yet. On Friday, when I get a better sense, on Monday, I'll do the work on the weekend. By Monday, I actually, in the back of my mind, I have specific times and dates, but I don't want to speculate on the speculation. Let me rather have facts and I can give it.
Sure. All right. Appreciate it.
Good question. Thank you for calling, Travis.
Thank you.
Let's go to Shivan in Boston. Shivan, how are you?
Hi, Basil. How are you?
I'm pleased that this time you called in and I've got time to talk about whatever it is you wanted to talk about, which is?
Yes. Yes, I would like to have your opinion on Valet. I mean, looks like it broke the support of 580 and 545 both. I mean, will it hold or it will still have a downside risk on it?
This is a stock. I remember on the way up back in 2009, it hit the 200-period moving average, and that was around about 10-ish, just under 10, and it screamed up to 37, and then it started to make the black line, the 9-period exponential moving average, instead of support, it became a barrier. So on the one side, you were walking the 9 EMA, and now it's like a gondola, and it's you're coming down, and that line, you can't break above that line. Gravity says you've got to be under the line. It's at $5.36, Valet, V-A-L-E. So this is a stock that has disappointed people for quite some time because it was such a favorite twice. It had huge moves to the upside. What I did a long time ago, I had a call in and it was at 17.14 was the high. And I drew an arch formation in the weekly with a 1-to-1 acceleration to the downside. And that took it to, let me give you the exact price. It took it to 7.95. Well, at 7.95, a little bit lower than that, it was at 6.82, became some kind of a bounce support, and it did it exactly the same thing. And now it's doing it for I don't know how many times. It's the pattern that I showed earlier on from my CD called the H pattern, the dreaded H pattern. That's the pattern that we're looking at. Lower, it takes out the left side low and keeps going lower. Now, this is what I wanted to say. When a sector, and especially when certain stocks within the sector, and Valet is in the minerals area, right?
No, it's iron and ore.
Iron ore, okay, iron ore. When that sector starts to deteriorate and becomes an out-of-favor sector, it takes a long time and it takes a catalyst before it can make the reversal. Sometimes the catalyst is in price. Sometimes it's legislation. Sometimes it is because on the left side, and let me show you something here in the monthly chart, it's starting to test major support. Well, the major support was back at 861, 862 in November, December of 2008. It's now at 476. So I have to go back further. And unfortunately, there is no real low until you get, until you get to the twos. So I can't use that as a benchmark, left side, right side, price time match. I can use 325. I wish I didn't have to use something so low. That's 40% lower than where it is. So now let me do this. Let me do it on a different basis. Now, you spoke about a test and then breaking the support. That technique of the inverted V or the H pattern, it goes exactly to the pattern that I keep talking about, the lowercase h, that takes out the left side, a low bar. So my rule of thumb is a very simple one. It works most of the time, not of course 100%, but it works most of the time. The bar that takes out the left side low, and let me tell you what it is, in this case, on the week of the 3rd of April, Valet went to 545. It then had a spectacular, the bounces in percentage terms are big, which is if you can get one of these, it's great because it went from the $5s to the $9.14. That's 40% gain. It's just huge. No, more. No, what am I talking about? That's an 80%, 85% gain. So that says that if under these conditions, the bar that takes out the left side low, which is the bar we're talking about right now, that bar or the very next bar has to bounce very strongly. It has to bounce so that it takes out either a moving average above or a peak above. So the moving average above is 625 and the peak above it is at 693. So those are the levels that I'd be looking at. So here's my recommendation. Do you have any position now, or are you just asking because this is something you'd be interested in buying?
No, I mean, like you, as you mentioned earlier, like I took the ride about like almost like a 40% ride up, and then sold it out and bought it again around like 576, and it's now like it's like lost about 7%, and I'm in for long term, so that's where I was like calling to clarify, or maybe it's too early to average down, or
yeah, you see that now that was going to be my next point. My next point was going to be one of the problems with gold and silver and copper and in this case Valet or FCX, which is a copper stock, mostly a copper stock, is that if you're buying for the long term, there's a difference between buying for the long term because it's not really going anywhere, but there's a chance that if it holds the support, it's going to more than double looking, or give you a 30 to 40% gain looking out. That's one way to look at it. The other is, do I want to get stuck with a stock that's decreasing my capital because it's going down and it's at such a low price that the percentage that it goes down is horrible when you're looking at a percent. You could say, no big deal, it's only a point lower. Well, a point lower on a $5 stock is already 20%. You're talking about a big percentage, right? 20%. So I would do this on any position, a new position that you would like to take. I would just say, hold off for now. You've got your one position. Rather than it stabilize, I'd rather add on strength than to, you remember we used to have someone that used to always talk about catching a falling knife. Gigi used to always say, don't catch the falling knife. I've put my metal gloves away. And that's the case right here. So the position that you have, you don't really want to get out of that right now, right? This is a position are you prepared to get out of the position that you have?
No, I want to hold on to it. I mean, like,
okay.
I'm in for at least like 3 years easily.
Okay, so then I'm not going to even talk about that position. What I am going to say to you is that the technique I use, and it's a technique that's worked very well most of the time, is that the bar that takes out the left side low, that's this bar right here in the weekly chart, has to either turn up very sharply by this week or at the latest next week. And then what does it have to do? It has to tag 625. For you, that'll be fantastic because you'll be in the money and you can start making other decisions. That's the best case scenario. If it goes over 625, the next level of resistance will be, what did I say, 690? Yeah, 692. On the downside, if this bar closes ugly this week, and ugly means it's under 545, and then next week there is a lower low and it closes lower than this week's low, I would suggest to you, you've got to be really careful about adding any position. Why? Because then I have to start looking at measured moves to the downside. The support, the resistance level is lower than it would have been if it bounces by the end of this week into next week. So a whole bunch of negative things take place. But I'm also in the area that says that if I'm looking at the dollar, and it's funny because I'm talking about the dollar, you're talking about something completely different, but the dollar now is weaker, and it's suggesting that right here within the next day and a half of trading is going to be a test whether gold can have the energy based on a weak dollar, just short term, to rally. If gold is able to get from 1160 where it is now by Thursday afternoon or Friday at the close into the 1171 area, then I think that your valet should benefit as well. The metals generally could participate in this, and I think that you have a chance to see it go above yesterday's high, which is 568. But I'm thinking that it'll still be fairly short term. That's my biggest thing here, is that the strength of the dollar seems to be holding quite well overall in the weekly chart. And that says to me, you still got to be very careful about valet. I would love in 2 weeks' time or 3 weeks' time, you call me and where is valet? It's trading at 625 to 645. It's made its low and it's trying to, for the next arch formation that could take 3 to 5 weeks. That'll start to say that it's trying to form a base, finally trying to form a base. But that's the only way I can see it happening.
Excellent.
So I hope that helps you. I'm just, the only thing is, if you were talking to me shorter term, I'd say if it closed underneath 520 was the low of yesterday, I definitely would either exit the position or get out of part of the position. You can always put it back on. But if you're looking out longer term, you don't really mind if it's, I don't want to see it down at 3. To me, long term or no long term, that's a lot to make up to come back to the 6s and 7s. But if it holds in the 480s looking out a couple of weeks, that's fine. But you do want to see it start to have slightly higher highs, slightly higher lows, and then it'll say, hey, I'm trying to form a base. At this point, it hasn't gone, as you said, it just took out the base. So that's the technique I would use. See how it closes this Friday and how it acts next week. Next week, it really has to be above 545. That's very important. Hope that helps you, Shivan.
Thank you, Basil.
Thank you very much for calling. Always appreciate it. So, folks, let's do this. I've got, I'm just looking at the scorecard here. Okay. I want to go back to this 10-minute chart and show you something that could be very interesting. You see how we've gone to a lower low? And that means that what's in play is this downtrend line. Remember, this is the one with no technicals at all. Let me just even get rid of the, I do this sometimes, then I'll say, oh, it's just too messy for those Fibonacci numbers. So I take it away because I like my technique. So this says we've taken out, we've gone trough A, B, C, let me type it in. Trough, there we go, A, trough B. Remember on the way we call them troughs, lowercase I use on the way down, C, D, E. Now we're getting to the trough F, leg F to the downside. It hasn't made a trough yet. F is where you often get a very nice bounce. Certainly G is where you can expect it. So this we're going to watch closely because by the time we get to 12 o'clock, that'll be indicating to us whether or not we're going to retest the lows. That, down 25 on the E-minis, whoa. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. Yes, we got programming all day. Don't forget, Daryl comes straight up. Then you got Steve Rose. You got Dave White. We've got, and then me. At 3 o'clock, I'll be doing Tom's show, Tom O'Brien's show. I'm not sure who's on at 4. So programming all session. And it's going to be very interesting. The close there, down 216 on the Dow, down 27 on the S&P. Look at the way this arch formation. Remember, this is what we were talking about right there, the arch formation. This is the pattern. Learn it, understand it, because we're going to see a lot of these patterns this in July. Okay, now let's get back to our story. So the VIX index. I need to talk about the VIX index, and I want to talk about it in terms of what you can expect under certain conditions. The VIX index trading right now at, what is it? Whoa, nice candle. But the day is young. We know these candles change very quickly. I want to talk about it in terms of, and we are long in the opening call just for clarification where we are. I don't want to make it sound like I'm talking our position. I'm just giving you what I'm looking at here. If there is a high above 19.80 today or tomorrow, without taking out 1550, let's call it 1540, between now and then, but there's a high. I'm not sure that I want to call that leg F. I'm going to call it F/B. And one of the reasons being that the weekly chart has been improving so much above the 200-period moving average. Remember, I was just talking a moment ago with Travis about the 200-period exponential moving average. Then I was talking to Shivan about it. This is the weekly chart. That moving average is at 1633. We are more than 2 points above it. The day is young. The week is young. It's only the middle of the week, exactly the middle of the week. But what it's saying is that the selling pressure in the market is the buying pressure of the volatility index. Just make it simple. I can give you the whole spiel about what the VIX is made up and all that. Forget it. Just the number. That's all you need. The number is that when you go to the high teens, watch out, because when you get to the 20s, two things can happen. One is you've got the chance that you're going to go for at least a short-term climax. Now, remember, I like to look at these things as an internal low, and 6 weeks to 8 weeks later, sometimes you can get the residual low. And that residual low could be lower or higher. It doesn't matter, but it's the low that is the most emotional, where the news reporters are out, everybody is there, but actually the damage was done with the internal low. And that's where I think we're headed over the next 3 to 5 sessions. We're in for a low that's going to give a really strong bounce. But that low could be anywhere. Look, we're already down 230. We just saw, hey, where's that chart? Look at this. Is that an amazing chart, or is that an amazing chart? Drew it in ages ago. Left side, right side, price time match. Is it getting close? Look, this is leg F. I spoke about that leg F on the way. Now it's on the line. So use your technical tools. Don't be afraid. In this case, for my subscribers who had never gone short before, they're short. I hope they're enjoying being short, even though maybe the other positions that they have in their IRAs or whatever, maybe for the stocks that they chose, maybe they're doing well, maybe they're not. But at least they are participating to a certain extent to the downside. To me, that's really important. So I just wanted to say, volatility index is rising. I'm not sure that this is the way that everyone expected another rally. Instead, it's going down. But that 17,500 on the Dow, that to me is really important, because a close below 17,500, especially if the VIX starts to go into the 20s, means you've raised the base of support to the mid-teens in the VIX index. And when we're looking at this, if you look at the Dow, as we're about to wrap up, and don't forget, you're going to have me at 3 o'clock for the Tom O'Brien Show, then you're going to have John Logan at 4 o'clock. So we've got just a full house. Look, this, I went to the wrong place. This is what we really wanted to look at. The Dow. If it takes out yesterday's, I did not like the wick at all of yesterday's candle. It looked like a false move to me. We don't know. But I can just tell you this, if we take out the low of 17,465 on a closing basis, that weekly chart says you've gone from a sell signal probably to a sell mode before Friday. Hey, I'll be back later on.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,